Hey, it's Brian Douglas. Today's video is really important for you because I'm going to reveal the worst credit advice people give you, the top 3 bad advice items that people will give you and how you can overcome them. It's really important because as a trained FICO professional, I understand what it takes to build a good score. Watch the video, let me know what you think. The worst credit repair advice revealed. Another expose from the Credit Rebound Institute. Hey, I'm Brian Douglas, and it is my pleasure today to share with you the top 3 worst things people are going to tell you about how to fix your credit. Now, I want you to understand that as a trained professional certified by FICO, that's the company that actually created the credit scoring that's used to determine the rates that we get on our mortgages and our loans and what we pay on our insurance and all that. Trained by FICO, I can tell you exactly the worst advice that you're going to be told about how to fix your credit. I'm going to tell you this is the advice that could just devastate your score, and we'll take care of them 1, 2, 3. Here's the first. Number 1, paying down liens or collections. I got to tell you, it's important for you to pay down things that you owe. I understand that the idea of borrowing means that you repay. That's all fine. But if you have a lien or if you have a collection item, it's already on your credit report. It's already hurting your credit score. If you pay it down, it will not come off your report. It's kind of like being pregnant. You either are or you aren't. If there's a lien or collection item showing up in your credit report, you're being hurt by it. You're already having that damage to your credit report. Paying it down won't help you. If you paid it down from $1,000 to $50, it will do no good. If you have a lien with $1 on it, it will affect you as if you have a lien for $1 million on it. It still is a lien. Now, if you want to pay down your lien or collection because it makes you feel good, that's all fine and well. My recommendation, however, is that you pay it off, not pay it down, and you negotiate with the creditor, with the lender, that if you pay it off, preferably at a discount, of course, if you pay it off, they would remove the negative information from your credit report, either mark it paid as agreed or simply delete it from your history. That would be the only way I would recommend you pay anything down or preferably off, is if you had a positive response from that creditor. If not, you've already paid the price. You're being damaged daily on your credit score. Do not pay that lien or collection down. Number 2, documenting or challenging old stuff. Now, a minute ago I said something about your liens and collections. Now, if you were to go back and document a lien or collection and try to challenge it, you might get it taken off. But you might do something worse. You might wake up that sleeping tiger, and perhaps if it's a collection agency, they may think, let's try going after that person again. And if they do, they can redate your collection item, for example, and have it be current, not old. Now, here's the thing you need to remember. FICO judges you based on your credit history. And what I mean is that the length of your credit history is important. And something that's older that would be negative won't hurt you as much as something new that's negative. Let me say that again. An old negative item that might be 5, 6 years old, for example, isn't going to hurt you as much as one that took place 6 months ago. Why? Well, obviously, if you have good credit over the past couple of years, that's going to show that you've recovered, that you built back your credit reputation, and stuff that might be older, they're kind of forgiving you for. So if you go back and challenge the old stuff, you may revitalize it, bring it back, make it current, and that could devastate your score. Here's the strategy you want to use for your own credit repair methodology. You want to look at the things that are most current first. You can challenge those because they're not going to hurt you if you lose. Get rid of the current things, then reevaluate where your score is. You may not need to touch the old stuff. So that's your second one. Documenting or challenging old stuff can really hurt you. And here, my friends, is number 3, closing the wrong accounts. One of my biggest pet peeves. So often, consumers will think, well, I have this old account. I haven't used it in years. It's got a high rate of interest. I think I'm just going to close that account because I don't like the bank anymore. That would be one of the dumber things you could ever possibly do. Why do I say that? Why am I so strong about that? Well, as you'll see in just a second, Fair Isaac evaluates you based on your history. So, for example, in this screen here that you're seeing right now, 35% of your score is computed based on your history, and 15% is on the length of your history. So you've got a full 50% based on history and time of history. So if you remove the old, proven items on your credit report, guess what's going to happen? They're going to evaluate you differently now, and you will have hurt your score. If you're going to close any kind of an account, close the new ones. Keep your old ones. The length of good history is so important to you. That is fundamental, yet so many people mess that up. You want to make sure that the older stuff is maintained. Now, I don't care if the rate of interest is 15%, 18%, 22%, doesn't matter. Our objective here is to keep your score high. And here's the deal. Use that card, if it's a credit card, use that card once every month or two. Keep the card active. Charge it and pay it off so you won't have any interest to pay. And even if you have a month of interest, it's a small price to pay to keep your score low, to keep your score higher rather, to keep your risk of a bad score low. Okay, so what I want you to do is to use your older cards, the new ones, you know, you can keep them also. Don't close anything if you don't have to close anything. If you have a ton of credit, you probably want to close something because you don't want to overdo your credit. But if you have 3 or 4 credit cards, you're fine. The older card, if you don't like the interest rate, you can negotiate with a lender. You see, but that's the key. You want to keep the older cards. Now, people that don't understand this end up, well, like this poor guy, screwed. They take the bad advice, they use the bad advice, and they end up in trouble. Here's where I see things. You're at a crossroads. Every day when you get advice, you've got to make a decision. And in this case, do you take the bad advice and end up in trouble, in fear and worry and stressed out, or do you keep calm and carry on knowing that you're being guided by people that understand how FICO scores are determined? Do you work with people that understand and that are willing to debunk the garbage out there so that you can properly build your score, so you can properly stay strong, so you can keep your expenses low, build the life you want? That's what we're all about here at the Credit Rebound Institute. So thanks for watching this video. Check us out at creditreboundinstitute.com. We're here to help you. We're here to help you build your score, to improve your life, so you can have one heck of a great credit score and be proud of yourself. This is Brian Douglas. Thanks for watching. Leave a comment below and let me know what you think.